All right. Hello everyone, very nice to have you here all because today we're discussing the UK claimant count rates change and of course unemployment rate as well. The data will be out in about 10 minutes from now, and as you can see here, me and Michael are here on the television to cover this data for you. Sorry. So as you can see on my screen, at the current moment, the forecast for the UK Claimant count change stands at 4.1k, while the prior figure was 3.9 thousand. Let's talk a little bit about the historical movement of this indicator. Here, I think it's crucial to remind you that the UK Claimant count change has been rising through the last couple of months, gradually increasing and finally jumping to 3.9k in November. And at the current moment, the change is expected to come out at 4.1k, according to Forex Factory. Also, I would like to mention that in the quarter to November, the headline jobless rate is estimated to have remained unchanged at 5.2%, close to the BOE estimate of the medium-term equilibrium rate. The jobless claims a narrower and less distant gauge, of course, as you know, tracking labor market activity is seen rising by around 4k between November and December, significantly up when compared with the latest 2 years of sharp decreases. Underlying wage growth, earnings excluding bonuses is expected to have decreased again to 1.9%, down from 2% a quarter before, while earnings with bonuses are also seen slowing from 2.4% to 2.1%. The BOE's Monetary Policy Committee noted in January that while domestic cost growth over the past year had been below that necessary for inflation to return sustainably to the 2% target, it remained likely to increase over time. Weak earnings are among the primary reasons the BOE remains very cautious about the monetary policy tightening. The BOE policymaker Shafiq recently said that she would not vote for a rate hike until she is, quote, convinced that wage growth will be sustained at a level consistent with inflation returning to the target, end of quote. Well, real pay remains boosted by very low inflation at the moment, but with inflation expected to slowly rise over time, and with wages crawling an average of just 2%, the wedge between nominal pay and inflation is seen squeezing soon. So let's move on and talk a little bit about the, not the change, but the rates. Here you can see different experts' opinions on this particular matter, and as you can see, most of them went for a 2.3% rate, which is unchanged for a couple of months already. I will not stop here for a long time. So let's move on to the Dukascopy community member sentiment on the cable. And as you can see at the current moment, traders are rather bullish here, with 57.89% versus the 42.11% bearish votes. And of course, you can see a couple of comments. And Wall Street 6, which is a bear on this particular pair, says that Carney clearly stated that there won't be a rate hike in the nearest future due to the turmoil in the global economy and the UK's sluggish growth. That was after we heard that inflation has finally edged up to 0.2%. This, however, can be the consequence of the low value of the pound and not that much improvement in consumption. Falling oil prices will pose downward pressure on inflation. With a potential rate hike out of the way, the cable will still fall. Additionally, over 1,000 redundancies in the steel industry are not going to help keep the numbers better. So thus, he is bearish again. So basically, I don't have any time left, and at this moment, I would like to pass the floor to Michael, who will cover the technicals for you.
Thank you, Kate. Good morning once again, everybody. So for the current day release, I've chosen the positive surprise trading strategy, expecting the data to beat expectations, and of course the cable currency pair. Sentiment for which is rather bullish at 62.95%, with the sterling being bought in 60.60% of all cases, and the US dollar being sold in 53.58% of all cases. Concerning the pending orders, both in the 50 and 100 pip range, we have the majority to sell the British pound. In 50 pip range, it's 58.49%, and in the 100 pip range, it's 60.44%. Other market participants are also bullish on the cable, with random traders holding 61.48% of long positions. Sexter Group has 52.87% of long positions, and TLFX, almost 3/4 of traders also being long the British currency. If we move to the market reaction table, where we can see the reaction for the cable for the previous 5-day releases of the Claimant count change, seeing that the data mostly disappointed us in the previous 4 releases, with the largest reaction being 59 pips and the smallest one only 22 pips. However, if we check the unemployment rate, in the past 4 releases, it surprised us with positive data, which contributed to the sterling's strength in those days, and there was mostly a positive reaction. So we might as well see a positive one today. And yeah, the average reaction we could expect is 39 pips, and based on this reaction, we can set the take profit and stop loss levels accordingly, with the take profit level located at 1.4175, which is a quite strong resistance since it is bolstered by the 4-hour R2 and the upper Bollinger Band, while the stop loss level is located at 1.4097, and unfortunately we don't have any other strong support to bolster that level. But also, if we look on the daily chart, which I've got over here, you can see that the candle has been in a bearish trend for actually in a longer term, it was since September, actually since the end of August, but in the shorter term, it was since the middle of December in a quite strong bearish trend. So we might soon see a reversal because the cable is being oversold, and maybe today's data will contribute to that. And finally, the technical indicators, which are giving us mixed signals basically in all time frames, with exception of the monthly one, which is giving us bearish signals, so they are unable to provide a clear sense of direction about where we will see about in which direction the cable will go today. But according to the Bloomberg forecast, we should see a better figure of the Claimant count change today. But other banks and companies like Commerzbank, they expect the figure to rise up to 5,000. Deutsche Bank actually expects a even better result, that the Claimant count change should fall down to 2,000. And another really good bank like Societe Generale expects also 5,000, so data to be worse. And we should see the data in a minute now. I'm already seeing some reaction to the upside. The average weekly earnings slightly disappointed us today, but a really strong reading of the UK job exchange, the Claimant count change. We see a reaction of 32 pips. At the moment was slightly less than the anticipated reaction. And the unemployment rate also surprised us with a positive figure, as it did in the previous 4 releases. But unfortunately, we didn't see the take profit level reached. But nonetheless, the reaction was positive. So that would be all from my side, and back to you, Kate.
Thank you, Michael. So guys, you can see in the chat section the actual numbers and still the reaction on Michael's screen. I think basically there is no need to say it once again. That's why we are saying bye to you for now, because we will have another data release later today, as well as the research webinar. So please don't go away and stay with us here to get to know more news on the economy, and then of course to catch some green tips, hopefully, for you out there. So thank you very much, guys, and see you later. Bye.